Alright, so happy Saturday everyone. I hope you are enjoying your weekends. Pretty dreary and cold here in central Illinois, so gonna go into some charting, try to warm up. First off, let's do the ES. We've got it on a monthly. I want to show you something real fun first, and then we'll dig into directions and all that fun stuff. So first, I'm gonna run a retracement from the 2009 low, and I'm going to run it up to the first high. And when we do that, we can see that the low of the pullback was 38.2 at 1006. Then we break that high, we move it again to this one until the next major pullback. And we see this pullback comes down into the 38.2 once again. And so on and so forth. We can continue this game where the retracement always holds at the 38.2 or the 23.6 of this base. You can see it holds here at the 23.6 at 1240 on the pullback. We move it once more, and you can see again the 23.6 holds it here at 1787 on the pullback. And once more, move up here, and the 23.6, though it does break, we do see that tail on the monthly pull back up above that at 2408.75. So why do I show this? I show this to tell you this. If we can assume that the deepest pullback ever on this retracement was the 38.2, then we can assume that the deepest pullback will come to 23.16. If we assume that the deepest pullback has only been to the 23.6 since back in 2012, then we assume that the deepest pullback is going to be around 27.07. Let me just lighten that up for you real quick. Boy, there we go. So we assume that the deepest pullback can be at 27.07. So realistically, how deep can we come back? That's my answer. 27.07. So we're talking 630 points. So 19% is the deepest possible pullback I could ever foresee if anything large happened. But I don't expect it. So we do the next best thing, and we find another pullback in a shorter term, and we apply a retracement. And this gives us some shorter term price points to watch based on the retracement levels. And so we see that the 23.6 is up here at 30.96, and the 38.2 of the secondary at 29.47.5. We could also note that 29.47.5 is a backtest of this breakout on the weekly chart. From that previous all-time high here around 29.50 before we broke out here back in October 19. So now we have some shorter term price points to the downside, 30.96 and 29.47.5. We also have this large node of volume at 29.80 to 3,000. So we can safely say that this general area is buyable, give or take. We have the retracement, we have the volume, and that fits the criteria for entry. We could also go ahead and put a uptrend here, and such as this, and then we also have an uptrend so long as price comes down in February or later. So three forms of demand here, or support, whatever you want to call it. So why are we looking at this price point to be short? As I kind of illustrated last weekend, if we apply a retracement from this high in September 2018 to the low in December 18, let's make it nasty. Let's some red, like, oh my god, watch out color here. And not nearly vicious enough. And it's up here. Let's just hide this. There it is. Okay. So you see the 161.8 up here now of this previous range. Generally the 161.8. It doesn't have to be a full reversal of price, but it certainly stalls price as an extension. So anyway, touched that last week at 33365. The all-time high is 33375. So we expect for now that the short-term directional price move will be flat to lower until this price point is crossed, or we reach a support level that can absorb the supply with demand. So what we see here again is the shorter term retracement applied from the December 24th lows into the all-time highs. Then we can come in to a daily chart. Come on, there we go. We can come into a daily chart, and we have several, shorter term pullbacks to test into supports here, to apply retracements to. Depending on the level of time that you want to cover and the prices you want to cover is where you want to apply your retracement levels at. So we could say that this is the start of an uptrend, so we can apply a retracement to this level. Have we used blue yet? Yeah, we used blue. So let's go ahead and say yellow. All right, and so now we can say that in this time frame, the next closest support is 31.93, and then the tertiary 38.2 down here at 31.05. And then if we wanted to go ahead and put additional targets on this, so there you have the tertiary levels on this time frame, and then we could go into even the shortest time frame, which is really what I think what I really think we're going to hold into. I don't really think you're going to see a sub 3200 pullback. Still a lot of demand on the chart, so we can do something like this, and this will show you your shorter term levels, even so much onto like an hourly chart. So you see that we can see here on the hourly a little bit better. You get a double top rejection up there at that 161.8, and price just falls. Just happens that news always tends to come around these price points, but either this, that, or the other. So double top and then failure. So then we see these shorter term levels of support and resistance that we were watching there on Friday off the double top. We saw the 23.6 shorter term break here at 3300.5. Price moved down below that price point, got really close here into the 38.2 at 32.78 or so. Price came down here into 32.80. Saw buying, price tested up higher, took off of this bounce. Price came off this low, came higher to test the 23.6 at 3300 level again, and found a lot of supply. We see that in the topping tail here on the 15-minute chart. Excess supply up here. Prices pushed back down, back into this consolidation level. For now, we see the longer-term areas horizontally here, 32.78 and 3300. Price currently consolidating between them. If we wanted to pull out here again, that's what I wanted. All right, and then let's go ahead and add. Oh, this video's getting long. Let's go ahead and add this retracement. Guys are troopers for sticking with me through this. All right, and then we'll add this retracement. So, Josh, what did you just do? I added a retracement channel. We don't need the negative values. There we go. That's better. So anyway, I added a channel, a Fibonacci channel, from the lows in October, and then anchored it to the low in January. And then for the high, I just used this first spike high off of the low that got set. And you can see the price breaks out of this a couple times, but it never hangs out for more than a day. And so far, that has been proven since the top of this channel was established on the 11th of October. Last time I checked, I think it was 80 out of 88 or 60 out of 68. Anyway, it was 88% of the time price stayed within this upper distribution, this purple distribution. We see that on Friday, price tests, or on Wednesday, price tests into the top of that channel, and then on Friday we get that move lower. It kind of gives a general idea of support on an uptrend as well. We can see that when price does break outside of the purple, this blue channel maintains price once it's re-entered as well. Here we see price break out, and once blue's maintained, it just stays within the blue until it can break back up into purple. Again, it happens here. Price breaks into the yellow, blue, and then back up into purple. So for now, it's maintaining into this middle consolidation channel of this uptrend and of this up channel. Really no major risk that I see unless we start to break out of the low of this channel, and we can start to break below, this 3,200 level we've discussed. But for now, not really looking for anything like that. I think with the momentum we have right now and the lack of news flow, other than the current virus going around, looking at maybe like 3,240. We'll come down. We can test this channel low, test this shorter term 61.8 at 3,240 as well, and then look for a price to move back up and out to test this 33.37 again. I do think this is going to be an area of contention for a while. I don't think you're going to see price just break up and just keep tracking. I think we probably see price, for the next couple weeks at least, just stay within this choppy area, whether above or below. I'm not saying it can't go above it. I'm just saying that it's harder for it to break away from it. So maybe if we did something like here, for example, and we would say that maybe we see price just stay, boxed into here, for some time. It's still, a 100-point range, but it's just not an advancing range. At least, that's just kind of what I'm watching for now. Again, 3,240, definitely a great buy point if we do make it into there. Our tertiary level is 31.93, so if we do lose this volume area, would look for that move into the 3,200, but certainly not expecting a breakdown of that. Again, this channel has maintained since October, so 4 months now, or over 4 months, so I'm not expecting it to be broken. This is the channel of ascent on our chart, and this is what we should expect to be maintained. I don't think it's a crazy ascent by any means if you assume that we've consolidated for the last 3 years. But I am just short-term cautious while we're within range of this 161.8 up here at the all-time highs. Moving forward, if we do maintain this channel and we do consolidate and we break over this all-time high, price targets for now are 3,373, 3430, and then 35.22. Obviously, we're going to have more back sets and opportunity to draw retracement levels and such. So these could certainly change on the upside, but so long as we maintain above this 32.40, I continue to expect this move to bias its way up. That does mean though that we can lose another 50 or so points. That's 5 or so points on SPY. If we hop over to SPY real quick, I don't want any of this. We'll just delete all this, and I just kind of want to see where 5 points is. So it puts us at what, like 323. Oh yeah, so it puts us somewhere in this like volume node right here. I don't know why I picked that one. That was silly. 323. Puts us kind of like there. We could do something like short-term retracement like this. Oh yeah, see, and so that backed us into the 38.2, even on SPY. I like to reference SPY too against ES just because they have different levels with the rollovers, their dividends. I also like to check it against SPX sometimes because it's more of a pure index. It doesn't have all of those things that modify price by time, and on the downside it also doesn't have volume. But I like to check it against all three just to make sure it works. So like here, SPY 38.2 sits right there as well. It looks like probably a couple gap fills in there if we do make it down there into the 38.2. Then if we swing over into the SPX, probably a lot of the same. Yeah, so why is there volume on my SPX chart? Oh, this is weird. Okay, odd. Anyway, so the 38.2 is down here within this volume node as well. This is weird. It's never had volume before. If anybody knows why this has volume, hey, let me know. Anyway, so big volume node down here at 32.35 on the SPX chart as well, as a major support point that we'll be watching for. So back over here. So anyway, all three of the charts match each other. They all say that we can make that 50-point drop. So long as price does maintain below this volume node that we've made up here. 1 second. Let's go into a 4-hour. So anyway, sorry about that. Anyway, so long as price continues to descend and we remain below the 161.8 and this established volume node at 33.20 to 33.30, I'll continue to look for price to be pushed lower into the bottom of this channel, whether fast or slow, one may never know. Obviously, it's going to be headline driven over the next week or so with the coronavirus out of China, but the chart says that while we maintain below 33.20, we're expecting a move lower. Short bounces or short the moves higher. Don't buy the dips while we remain below that point. 33.20 obviously resistance with volume. Now we're at 3,300 resistance with this retracement. So far we've seen this blue channel try to hold price outside of it. And again, continuing to do so here, only wicks below into the lower part of the channel. Here, just a wick below right now. If we start to see pressure and holding below this middle part of this channel, and this 32.77.75 getting tested a little bit more, then we'll watch for that breakdown into 32.60, into the 50 retracement here and support, and then finally down here into the 61.8 at 32.41. If we get a wick break below the low of this channel, it's not too bad. The channel can adjust, or we can assume that to be a new low, just by moving this to wherever that low is. But ultimately, we would want to see if the 61.8 is going to get tested. We would want to see it come pretty quick, while the base of this channel is still somewhat close. Otherwise, you kind of lose that opportunity with the ascent of the channel support moving higher. So to recap, price lost that 3,300 low, looking for a move down, 32.40, the sweet spot to get in for a nice bounce if we do lose the 32.78 point. Not assuming anything lower than 32.40. If we do wipe out into 32.93, it's definitely buyable. To the upside, 33.72 and 34.25.